Hi, I'm Nick Pizzaris with Main Street Brokers and Brilliant Real Estate. Everybody's been talking about a big topic locally here involving real estate. Houses are selling for crazy amounts of money, and yet there's all kinds of people out there wanting to buy them. Have you been wondering why? Well, let's take a look at some numbers. First things first, we all know that interest rates are down right now, right? We've seen them creep just a teeny little bit. Will they go back down? Are they on their way up? Have we already hit the bottom? It looks like we may have hit the bottom. Let's find out what this means, though. Let's take a look at some numbers from then and now. All right. Then, well, let's say a particular house you were going to buy was going to cost you $200,000. Okay. Then and now. All right. Then you were paying $200,000. Okay. Not bad. What's that house going to cost now? That house might be as much as $215. It might even be $220. It could be higher. Let's say it was $215. Some easy numbers to work with here. Okay, $215. So then $200,000. Now $215,000. All right. Now, how much money are you putting down? All right. Let's say down payment. All right. Down payment, let's say you put 20% down and you were avoiding PMI. If you don't know what that is, it doesn't matter at the moment. It's just something you're not going to have to pay, okay, if you put 20% down. So what about now? We'll say you're putting the same thing down. 20%, right? Down payment, 20%. Okay. 200,000, 215,000, you're putting 20% down either way. Interest rate. Then, let's say a year ago, year and a half, maybe 2 years, somewhere in that general range, about maybe 3.5%, right? I should also take a moment to tell you, I am obviously not a licensed mortgage loan officer, right? This is not a loan quote or anything else. This is simply us looking at a real estate scenario. That kind of advice, we can connect you with some bankers to talk to, all right? But let's take a look here. If you say you got 3.5% interest, right? Interest rate was 3.5%, give or take a little depending, right? And it could vary a lot based on your credit position too. All right, so today, where are the interest rates at right now? Maybe about 2.5%, right? Could be a little higher, could be a little lower, could be a lot higher, depends on what your credit is, right? But let's say about 2.5%, all right? So same thing, interest rate, 2.5%. So you're telling me you're going to spend $15,000 more for a house right now, sticker price, but then you're going to pay about 1% less in interest. Does it really make that big of a difference? Let's look at the rest of the numbers. Say you're going to do this over, we'll do term, 30 years. Same thing over here, term, 30 years. Okay, so there's our board. There's what we've got so far. What does that look like? What's your payment like? Well, assuming all these different things, okay, and we'll take taxes and insurance out for a minute, right? Obviously, your payment to the bank, if you have those things escrowed, will obviously be higher because you're going to have to pay those every month as you go. Let's say for a minute we take those out of the equation because taxes change over time. Insurance could be different depending on what kind of insurance you have, maybe even where you get it from and anything that you've added, any special riders or anything. So it could be different for everybody. So let's just take these numbers to work with. Your monthly payment in this scenario is going to be about, payment. All right, payment's going to be about, what did I work out here? $720. All right, $720 per month. Okay, that's not bad. Now let's look at this one, right? The $215, your payment, about $680 a month. All right, so payment is going to be about, we'll say, $680 a month in this scenario, right? Again, talk to the lender. They can give you all the other numbers that you might need to consider. So how does this actually work out for you? Interest over the life of the loan. Well, your interest that you're going to pay in total over the life of this loan, it's going to be about, we'll say interest total is going to be about $99,000. That's $100,000, folks. Just about. All right. The other scenario. We're going to say interest total over the life of that loan, in this case, was about $73,000. There's a difference there. There's a big difference there. Why is that number lower? The interest factor has a significant impact over what you're paying over the life of that loan, even with a higher sticker price. That house might be $15,000 right now, but what are you going to save over the life of the loan? Whoops, that's going to be too light. Hang on. We'll be able to see this one. I know it's red, it's savings, it should be green. The green doesn't show up very well. Okay. Interest savings over the life of the loan. Folks, that's $26,000. $26,000. In this scenario, assuming these numbers, that's where you land. $26,000 saved. What could you do with $26,000? That could be a car, right? It could be part of a college tuition. What if you took that $26,000? I'm going to also preface with this one. I'm clearly not a financial advisor either. If you do want to talk to a lender, if you need to talk to a tax professional, if you need to talk to a financial advisor, give me a call, let me know. I'll connect you with some people. I'll give you some referrals, right? Then you can go out and pick who you want. If you have those kinds of questions, you talk to those people. But if you think you might be ready to sell one house and buy another house at this point, then you need to be talking to me. So, in this scenario, we saved $26,000. What if you could take that $26,000, instead of building it up over time over the life of the loan in savings, what if you took that whole $26,000 right now and you sunk it into something else, like an investment property, as a down payment? Let the tenants pay it off, you got your money back. Then a bunch more. What if you could end up with over $100,000? Even if you found a way to invest it somewhere, again, talk to a financial advisor. What if you invested it somewhere and found a way to get 5%? Folks, that's over 30 years, that would be like $112,000. All right. What if you did the scenario I just gave you and you invested that money in an investment property and paid it off in 15 years? What if you all of a sudden had $100,000 in 15 years? What could you do? Might it pay for college? Maybe even a few times over, depending on where you went or where your kids went, right? This is wealth building type of stuff, folks. This turns into much bigger money over time. So why is everybody doing this? Because right now they can go out and they can buy a house. Even though it's more money on the sticker price, they're paying a lot less for that house in the long run. Not only are they getting that savings, but they're taking the house that they have right now and they're selling it and maxing out the cash they can get out of it because people are paying more for it. Now you suddenly add that to this number as well, and you can do a whole lot more with it. If this sounds like something that you want more information on, if you think you might be ready to buy a new house while the rates are low before they start going up even more, if you think that you're ready to sell a house and try to max out your cash on it, you need to give me a call. We need to talk about these numbers, right? Numbers real easy, folks. It's 888-HOME, 309-888-4663. Give me a call. I'm waiting to talk to you.